Hello everybody and welcome back to the Financial Freedom Show. I did want to give you guys a quick portfolio update before we get into today's video. I did purchase TLT in my portfolio. I did take the 10,000 from SPAXX and invest that into TLT as I mentioned in my previous video. So we'll see where that goes over the next couple months. I have a long-term goal with this holding. I plan on holding it for the next couple months just to see where it goes. I'm planning to hold up to about 150 or more per share. If the price gets up to that point, I might sell out and just go back into SPAXX, or I might continue to hold. We'll see what happens in the future. But my plan is to hold this in the near term and just keep holding on to it as the Fed lowers interest rates. I'm going to continue to add to my joint account here, and I plan on putting my next paycheck in here so that I can rebuild my balance in this portfolio. So hopefully on the next video I'll be up to about $39,000 in this portfolio. I want to get back above $40,000 before I continue depositing towards my mortgage. They actually switched my mortgage servicer recently, so that's why I paused my mortgage additional payments, just because I'm waiting on that change to be implemented. So this month I'm actually going to pause my mortgage contributions and just put it into my Fidelity portfolio. So I hope you guys join me for this journey, and without further ado, let's get into today's video. Today we're going to be diving into an ETF that focuses on some of the most prestigious companies in the market, those that have been paying and growing dividends for decades. That's right, we're talking about the ProShares S&P 500 Dividend Aristocrats ETF, otherwise known as ticker symbol NOBL. This ETF offers access to a portfolio of companies known for consistently increasing their dividends for at least 25 consecutive years. In today's video, we'll cover everything you need to know about NOBL, its strategy, how it fits into your portfolio, and why Dividend Aristocrats have stood the test of time. So without further ado, let's get started. So what exactly is NOBL? The ProShares S&P 500 Dividend Aristocrats ETF tracks the performance of the S&P 500 Dividend Aristocrats Index. This index is composed of companies in the S&P 500 that have increased their dividends for at least 25 consecutive years, an impressive feat that speaks to the financial strength and resilience of these companies. These companies have navigated market downturns, recessions, and economic booms, and yet they've continued to reward shareholders with their growing dividends. NOBL gives you exposure to these companies in one simple, cost-effective ETF. Now let's talk about how NOBL works. The ETF holds about 65 companies, and the holdings are equally weighted. This means that each company in the fund has roughly the same percentage allocation, which helps ensure diversification and prevents any one stock from dominating the portfolio. This equal weight approach is different from many other ETFs, which often use market cap weighting, meaning that larger companies get a bigger share of the portfolio. In contrast, NOBL's equal weight method helps to spread out risk, so you're not overly reliant on just a few large companies. The fund is rebalanced quarterly to maintain this equal weighting, ensuring that no single stock becomes too large over time, which is crucial for managing risk in your portfolio. The index is a subset of the S&P 500, and it's designed to include only companies that have consistently increased their dividend for at least 25 consecutive years. First, the company must be in the S&P 500 index. Secondly, the company must have increased its dividend for at least 25 consecutive years. Lastly, the company must meet certain liquidity and size requirements to ensure it can be easily traded. Once the companies pass this initial screening, they're added to the Dividend Aristocrats Index, which NOBL then tracks. The ETF aims to mirror the performance of this index by holding all the stocks in it. One of the unique things about NOBL is that it uses an equal weighted approach to structuring its portfolio. What does that mean? Well, unlike other ETFs that allocate to companies based on their market capitalization, Giving larger companies more weight in the portfolio, NOBL allocates the same percentage to each stock. This equal weighted strategy helps to balance risk instead of relying heavily on a few large companies. NOBL spreads its investments more evenly across all of its holdings. Each company, regardless of its size, gets about the exact same weighting, about 1.5 to 2% of the total portfolio. This approach prevents any one stock from dominating the ETF and ensures that the performance is driven by a broad range of companies rather than just a handful of the largest ones. The fund is rebalanced quarterly to maintain this equal weighting, which ensures the portfolio doesn't become skewed over time. Rebalancing is an important aspect of how NOBL works. As the stock prices fluctuate, the equal weighting of each stock will naturally drift over time. To maintain its equal weighted structure, NOBL rebalances the portfolio every quarter, adjusting its weightings of the stocks back to equal levels. Let's say that one of the stocks in NOBL performs really well and the price shoots up. That stock would end up a larger portion of the portfolio. So during the next rebalancing period, NOBL would reduce the allocation to that stock back to its target weight, while potentially increasing the allocations of other stocks that haven't performed as well. This process helps reduce risk and maintain diversification across the portfolio. So why do investors love dividend aristocrats, and why should you consider adding them to your portfolio? One of the main reasons is stability. These companies have a long track record of increasing their dividends, which shows their commitment to returning capital to shareholders. It also suggests that they have strong underlying businesses that can weather economic storms. Another big reason is the consistency of income. Dividend aristocrats aren't just paying dividends, they're growing them year after year. This can provide a relatively reliable and increasing income stream, especially for retirees or income-focused investors who want to see their dividend payments rise over time to help keep up with inflation. Historically, dividend aristocrats have outperformed the broader market during times of volatility. During market downturns, these companies' commitment to paying and increasing dividends helps cushion losses, making them a defensive play in your portfolio. Let's take a look at NOBL's performance. Over the past couple years, NOBL has delivered strong total returns, combining capital appreciation with a steady stream of dividends. While it might not be the fastest growing ETF, it offers a more conservative income-focused approach that can add stability to your overall portfolio. As for dividends, NOBL typically has a yield that ranges between 2 to 3%, depending on market conditions. That might not sound sky high, but remember it's about the long-term growth of these dividends. As these companies continue to raise their payouts, investors in NOBL benefit from an increasing income stream over time. NOBL's dividend payout frequency is quarterly, so you'll receive payments 4 times a year. And with the strength of these companies, there's a good chance that these payments will grow over time. Now, while NOBL is a great ETF for dividend growth, it's also important to understand the risks. One risk is sector concentration. Dividend aristocrats tend to come up from more defensive sectors like consumer staples, industrials, and healthcare, which means NOBL is somewhat concentrated in these areas. This could lead to underperformance during periods when growth sectors like technology or communication services are leading the market. Additionally, some of these companies might not offer the same explosive growth potential as younger or more innovative firms. Another risk to keep in mind is that by focusing on only companies with a long history of raising dividends, NOBL excludes companies that might offer higher current yields but haven't been around long enough to become dividend aristocrats. So how can you use NOBL in your portfolio? For income-focused investors, NOBL can be a core holding, providing a stable and steady growing income stream of dividends from companies with a long track record of success. It's a great way to build wealth over time thanks to the power of compounding dividends. NOBL also works well as a defensive play. During volatile markets, dividend aristocrats tend to hold up better than the broader market, making NOBL a useful tool to reduce risk in your portfolio. Finally, NOBL can serve as a complement to growth-focused ETFs. If you already have exposure to tech-heavy funds or small-cap stocks, NOBL can help balance your portfolio by providing exposure to more conservative dividend-paying companies. In conclusion, the ProShares S&P 500 Dividend Aristocrats ETF, or NOBL, offers investors a solid blend of dividend growth and stability. By focusing on companies with a long history of increasing dividends, NOBL provides both income and the potential for capital appreciation, making it an ideal choice for long-term income-focused investors. Thanks for watching. If you found this video helpful, please don't forget to hit the like button and subscribe for more ETF breakdowns, investing strategies, and financial tips. Have any questions about NOBL or other dividend-focused ETFs? Drop them in the comments below. I'd love to hear from you. Until next time, thanks for watching.